Hi, my name is Scott Gibson with Beneath the Surface. I'm here with Jay Taylor of Jay Taylor's Gold, Energy, and Tech Stocks. Jay, thanks for being with us.
Oh, my pleasure.
Now, you're a macro, big picture look at what's going on with gold and the economy and politics. Can you give us a bit of an insight on that and how it leads into gold and what your expectations are for gold going forward?
Yeah, I think we're in the bull market of a lifetime for gold mining stocks, Scott, but I don't think it's just any kind of gold mining company. I think you need to focus on companies that are in production, that have cash flow, that can grow their companies organically. And the reason I say that is because I believe we're in a bear market generally, a big bear market. And so I'm interested in, so that means that the juniors, the guys that have to raise capital to put holes in the ground and explore and develop their projects, are at a big disadvantage because they have to dilute their shareholder base so much. So I'm looking at companies that are actually in production or streaming companies like a Sandstorm Gold or companies that are in the project generator model that can stay alive and have other people spending money to develop their projects. I think sustainability, survivability in this market is very, very important, and the days of speculation in the exploration stocks, it's a very, very difficult time for that game. So I'm really focused on the producers, the guys that not only are producing for profits now, but have large upside exploration potential that they can develop with their own cash flow.
And you think we're in a bear market going forward? Why is that?
Well, I think we're in a grand bear market overall, and because I think we have a major credit problem, excesses of the last decades, but especially the last 10 years, 20 years, the housing bubble in the United States. There's just so many problems. There's so much debt that cannot be repaid. And whether Bernanke is successful or not, the point is that you're going to have to reduce the amount of debt relative to GDP. And that's a very painful process, and that means that people are not speculating. They're selling the more risky things, and they're buying the things that have value. And that's why you need to buy the gold mining companies that are producing cash flows and can grow organically. That said, these kind of major credit contractions turn out to be the best of all worlds for gold mining, for the gold mining industry and the producers. And the reason for that is when you have these major credit contractions, you see the real price of gold, what an ounce of gold will buy, rises very dramatically. And to give you an idea, Scott, right before Lehman Brothers in 2008, an ounce of gold would have purchased only 17% of the Rogers Fund, the Rogers Raw Materials Fund. It shot up to 44% by March of 2009. It's at 47% now. With that, the major mining companies have seen their profits surge. So it's a real bull market in terms of earnings for the major mining companies, not necessarily the peak in their share prices, but I'm interested in buying companies that are strong, they have strong balance sheets, and they're growing, and they're vibrant. That's what I think you have to own in this market.
And what are some specific examples of that? Some companies, you mentioned Sandstorm, for example.
Well, Sandstorm is a streaming, Sandstorm Gold is a streaming company that I think is the best model there is for owning. I think they own a portfolio of companies. They're like a royalty company, but a hybrid royalty company, really, because what they're really doing is they go in and provide capital for a company to start up their production, and then they get to buy a certain percentage, say 15, 20, 25% of the production for the life of mine at the cost of production when the mine went into production. And so they get to benefit even though the costs go up. They're still buying, say, 25% of the gold production at $400 and selling it at the market. And another advantage is they don't have the sustaining capital. Other companies have to keep putting money back into the mine to keep it going. They don't have to. So that's the best. I think that is the number one. That is my number one pick this year, Sandstorm Gold.
Well, I'm a little biased, full disclosure. I do own the stock and I like it as well. How about yourself?
Oh, I do. Yes, I do. I recommend it to my subscribers. I talk about it on my radio show. I own it personally as well.
And what about other models that you like in terms of the kind of companies?
Well, I think the project generator model is a good way to go as well. And Eurasian Minerals is my favorite in that sector. Riverside Resources is another one I like, and the idea there is that you're giving up a percentage of your project, but you're letting other people spend the valuable dollars, the hard dollars, to drill the high-risk holes and expensive holes to put in the ground to prove up the project.
Diluting the project, not the company, not having to do a whole bunch of financing.
Exactly right. And I think you come out the better way if you have really sharp geologists that pick good projects that have good potential. One of those is going to hit only one hits, and then you're home free and you're done extremely well.
Exactly.
So that's the second best model after the streaming model, I think.
I love that model as well. Yeah, I do own Eurasian. I don't own Riverside.
I do as well. Eurasian Minerals is a favorite of mine, and in my newsletter, on my radio show, and also on it personally.
Well, thanks very much, Jay, and thanks
You're
for being
welcome.
with us.
My pleasure.
Again, that's Jay Taylor of Jay Taylor's Gold, Energy, and Technology Stocks. I'm Scott Gibson with Beneath the Surface. Thanks for being with us.